Right, so welcoming everyone to today's IMR. Oops, sorry about the title. We need to change that. Trump, of course, that was over. Budget rally. Okay, so a little bit of a hiccup in our data today, so we're going to do a workaround. So the budget has come and gone 2 days back, and if you're watching the budget live, you know that as soon as Mr. Jaitley finished his speech, the rally commenced, and if you were not even a fast, but just a a half decent intraday trader, then there was a lot of money to be made on that day, and some BIC members actually did make anything between I know for a fact between 20 and 60,000 rupees in that 2.5 hours. So I don't want to take their names right now because they prefer their privacy. So in case they watch this later, my hearty congratulations to them. Okay. So it was a good day. The rally, and like I said, it was a good intraday trading opportunity. All right, so let's jump into ask this question about the markets and where next from here. So on the my daily update file for what I normally use has not come, so I'm just going to do a sort of workaround today. This is on Investor, and 1 second. Right. Okay. So this is the Nifty after today's move. First of all, of course, you had the brilliant double bottom in November of last year, and early the end of the year, and after that at 7,900 or 8,000, we've rallied all the way to 8750, almost a 10% rally in about 5 weeks, which is impressive by any standard. Generally, up moves like that are on an index are definitely impressive, and are they repeatable and sustainable? That's a very moot question. And all that's happened on excellent volumes. The volumes continue to increase. Even today, the volumes have been pretty good. So where basically the Nifty has essentially come to 8750, a sort of resistance zone, round off number 8700 to 8800, and is perhaps doing a pause there. The life high in terms of where the market has been is of course this level. We'll have to see whether it is able to reach that, which is at 9,125. So about 400 points away from there. And if it goes above that, then definitely a much higher level can be expected. It's time, of course, because the quarterly results are also out, to do a fundamental review of the markets. We'll do that sometime soon. So watch out for that. But for now, you can definitely be aware that the markets are definitely not cheap. They are definitely on the expensive side. And in terms of sustainable headroom fundamental, there is definitely not too much scope. Right? So from a fundamental perspective, it's probably more, trade the rallies, but at some point, not sure when, things may turn down, but that's only the fundamental view. In terms of the technical view, there's a clear, strong uptrend in place. That's the uptrend on a weekly chart, sorry, on a daily chart, and very unlikely that this uptrend is going to be broken or reversed as of now. But 8750 is definitely a resistance point where we'll have to see what it wants to do. after the almost 150-point rally on the budget day, it will be quite okay for it to consolidate here and then see where we go from here. So there is definitely no question of shorting, except of course the IT space, which we'll have a look at later. But the trend is clearly up, and one should basically be on the long side. So let's look at what the global markets have to say, and those have also been doing quite well. And we want to know how we are, within that. Just to very quickly point out, as far as the budget is concerned, nothing significant, nothing path-breaking, nothing transformative. Everybody is aware of the cut in income tax in the 5 to 10 lakh range. So that's about 12,500 rupees less tax for just about everybody up to 10 lakhs. Apart from that, no changes. And the other thing was in real estate, the long-term capital gain tax holding period reduced from 3 years to 2 years. And that was definitely a boost for some of the realty stocks. A lot of announcements of increased potential infrastructure spends and all those things, but we'll just wait to see if that comes to reality. If you read the commentary, generally I think the biggest relief was that long-term capital gains tax on equities was not imposed, and that was one of the biggest concerns about whether that would or would not be imposed, and the fact that nothing was done was a major relief for the Indian equity markets. Coming to global indices and looking at how we are placed within the global setup, let's look at start with the Dow Jones. We all know that the Dow Jones has now sat above the 20,000 mark, and that was one critical level for the Dow Jones. It broke out from that, so that itself is now level that it has broken out of, but has come back and has come back into this consolidation zone between 19,700 and 20,000. Now, where does it go from here is, I think, the moot question. Today, there's some news on the news channels, American news channels, that Donald Trump is going to do something about financial regulations, and he's going to cut them down and reduce those. So I'm not sure about what the details are, but most of these regulations were the ones which came into place after the 2008 crash. And if he's going to reverse that, well, good for the banks on the financial industry, I suppose. But well, generally, just sticking to core principles may not be such a good idea for the way these financial bubbles will start again in the long term, and who knows what the issue of that will be. So just sort of two counterpoints to keep in mind as far as this move from 19,800 to 20,100 on the Dow Jones and back is concerned, is whether we have a sort of a top in place, and then we're going to see a correction of this move from about 18,000 to 20,000 on the Dow Jones, which was almost a one-way move without any correction, any meaningful correction at all, no price correction at least. So whether that's going to happen and whether we should be prepared for that, in which case the Dow Jones may not actually go back above 20,100 for some time to come, now that sort of maybe euphoria is over and maybe more substantiative things are being looked for by the equity markets there. There is, of course, all the backlash against the immigration, especially the technology companies based out of on the West Coast, especially Washington State, Seattle. So it'll be interesting where that goes. And of course, we'll talk about the H1B thing for the Indian market a little bit later. But the Dow Jones clearly sort of showing I think a top heavy sign, in my opinion. Any rally in the US markets is sustainable only if it can close above 20,100 for maybe at least a few days on good volumes, and then we can review. But this looks like a sort of, for me, a top that has been put in place, and right now, at the very least, it is back into its consolidation zone. If the Dow Jones breaks below 19,750, then one could say in some ways that we have head and shoulder top that was put in place. Just think about this market going sideways for a few more days or weeks, and then breaking down. So this entire left side here, if I hope the cursor is reflecting on your side, would be a sort of left shoulder. This would be the head that happened in Jan, and then after summer consolidation, if it breaks down, the entire consolidation zone on the right would become the right shoulder. So the measuring implications not too much, about 300-400 points, but then that would be the start of a downtrend and take the market all the way back to 18,700 or even 19,000, 19,200 initially. Right? So watch for that and see how these things go. So that's on the Dow Jones, technically speaking. Looking at the other broader markets, S&P 500, very similar picture. You can see the consolidation, the pop to 2,300, and then the consolidation back into the sideways zone. So US most probably doing that and nothing else. So the Nasdaq also, in a sense, more or less the same picture. So really nothing to write home about, except that didn't seem to really have a consolidation pattern, and one could argue that seems to be in a pretty decent uptrend, the Nasdaq, and the technology companies, at least for some time, might be doing well. So there's an uptrend which is clearly in place on the Nasdaq index, which is not there on the S&P 500, and it's not there on the Dow Jones index. So overall bullish to sideways as far as the US is concerned. Coming to Europe, starting with Germany. So we've seen a big correction there, strong red candles. So in Germany, a lot of very potentially key events, elections, Germany election, France election, I think 2-3 other countries, I'm not sure. Right, so how that is going to bear on the equity markets there. A lot of political events coming up, and of course the Brexit deal being tabled on the UK Parliament, and what the impact of that could be. Anyhow, these red candles on the DAX are not confidence inspiring. If anything, looks like the DAX could break down from these levels. The clear support is at around 11,200, maybe even 10,800 as far as the DAX is concerned. If we look at it from the fullest data that we have, and life high of 12,363, unlikely to be reached in the short term, I think, as far as the DAX is concerned. So the Dow Jones, the US markets have hit life highs, but not the European market for sure. Right? And doesn't look like it's really going to happen anytime soon as far as the DAX is concerned. All right. So bearish on the DAX, basically. Right? And then again, the political uncertainty there to be kept in mind. Looking at the FTSE, so you can see clearly how it came back down to its old life high of 7,100, and right. So made a new life high of 7,340, and then has just kept correcting, and it's I think taken that 7100 support for some time, and my view is that it will probably correct even further from here, and the FTSE could perhaps go pretty strong support actually of where it is right now. But if it breaks that 7100, then at least 7000, quite likely even 6800 is on the cards as far as the FTSE is concerned. Looking at the CAC, so the CAC also bearish, actually quite, it's more bearish than I would say the DAX and the FTSE. The French economy has definitely not done as well as Germany or UK, so there's an element of that. And I think the CAC is quite strongly, I think very high probability that it's on its way back to 4600. So it's at 4800 right now, almost 200 points. That's almost a 5%, 4 to 5% correction on the CAC in the coming, let's say, maybe a month or two. So actually, it would be good to know if anybody is either watching or live, if at some point, not necessarily right now, nothing urgent, can get a calendar of the European elections, when they're going to be held, when the results are going to be announced for the various countries, and extremely, you know, event-rich periods in front of us. Be very interesting, not just from an academic perspective, but also if anybody is trading the foreign markets, I think there'll be plenty of opportunity. Right. If anybody is a Elliott wave practitioner, then there's a, I think, very nice Elliott wave pattern here right now from Jan of this year to now on the CAC. I'm not going to spoil the fun by mentioning it. If you know, then try and figure out what it is and what is likely in store based on Elliott wave. Okay. Right, so this data market has now come. Nikkei is looking at the short term from December to now. So it went up along with the US markets from 18,300 to 19,600, and then has just sort of consolidated and gone sideways and showing more bearish signs than any bullish signs. So looks like the name of the game across the world, Europe and US, is at best sideways, most likely a bearish view from the global side. So this is quite interesting that India, in a sense, has been doing exactly the opposite of what the world has been doing for the last, I think, 3 to 4, 5 months. We were sort of not really going up in December, Jan, or rather September, December, November, December, when the US markets were, and then now there we have sort of consolidated and maybe on the way down, and we are rallying up quite strongly in the last 3 to 4 weeks. So definitely a sort of a disconnect, a divergence between global indices and the Indian indices. So given that that's the behavior for the last many weeks, would be a little difficult to really say exactly what connections or linkages that the global markets have on the Indian markets right now. So it looks like a lot of local factors are the ones to pay attention to. And we've got, of course, the state election. So electioneering is over in, I think, Punjab and Goa. It will soon get over in UP. I don't know. It looks like the electioneering things seem to have become shorter and shorter. I don't know if a shift in my perception or my way of understanding things. Looks like election news is just nowadays just 3-4 weeks. Earlier it used to be sort of 3-4 months in a sense. But it's now just 3-4 weeks, and then you have the election just happening sort of just like that. Right? Anyhow, So that's as far as the Indian markets are concerned. Coming back to the Nifty, right, so that we are clear. So that's the Nifty at 87.50. If it breaks, then I think it may not jump up very quickly to 9,000. You never know. Just be a little circumspect, but yeah, I mean the trend is still up, and no question of shorting it. Should be looking at global markets. Sorry, at the uptrend. The big events will of course be elections. So for the next 3-4 weeks, maybe in a sort of sideways mode. But we said that before, and the market just continue to rally up. So is the market sort of ignoring all this political and budget issues and just doing its own thing? Who knows? What one should not lose track of is the uptrend that has happened with excellent volumes in the last 4 weeks. So it's very strongly bullish. Okay, in spite of the negatives from the rest of the world. All right, so let's look at sector indices now, and I'm just going to do that on this. So let's start with Bank Nifty. So I think the two big ones, Bank Nifty and CNXIT, are the ones we should be really looking at. So the Bank Nifty rallied today further, and that's in my view definitely on its way to its life high. Looks like that. So it's not far from there. On a closing basis, the life high is there, but on a high basis, it's there. So that's something to remember. Life high basis is there, but on a closing basis, it's somewhere there, and we are not far from that. Reducing interest rate cycles, a lot of money, in the banks. They've got to lend it out. All these are good things for the market. And there's at least one item which seems to be flying off the shelves all said and done, which is four-wheelers. And given the very bullish sales that are happening in the four-wheelers, at least there is that part of the economy which seems to be doing quite well. So the Bank Nifty and all the banking stocks definitely to be bought. Very strong bullish sentiment. 20,400, 20,500. After that breaks, then we'll have to see and review what happens after that. So that's one place. I think almost the opposite is IT. What happened? Nifty. So Nifty IT, this big fall, and then this is, in my opinion, just a bounce in the IT stocks. The negative sentiment in the IT stocks is extremely strong. Yes, I am speaking. What happened? So on the Nifty IT or CNX IT, or just use the new name, sorry, Nifty IT index, it's no longer CNX IT. Big falls that have happened, and this is, in my opinion, a bounce on the continuing downtrend, and IT stocks are definitely something one should have gotten rid of from one's portfolio some time back. And there's really a lot of negativity and headroom which has built up, and this downtrend, let me make it weekly or even monthly, very rare. So yeah, it's much cleaner chart. So you can see that on the monthly charts, the downtrend on the IT thing is just in a sense getting sharper. and I don't really see this improving in the short term. And if you look at the business environment or the outlook for the Indian IT companies, I think they're progressively getting worse. The key thing I think to watch for is perhaps this level at around 9,400. If that breaks, then what else is possible? Right? This is one of those things where a sector like this, a major sector, uh, is the first one to deteriorate, and then many other sectors deteriorate later. If you go back to the 2007, 6, 7 rally, and then the 2008-9 crash, you will see that there were quite a few, not quite a few, but 2, 3 sectors, major sectors, which did not participate in the 2008 rally. They had already topped out in 2007, and then they started coming down in 2008 while the overall market was going up. And then, later on, more and more sectors became bearish, and then the market sort of turned around. And I'm just wondering whether a scenario like that is panning out. These are things that take many months to sort of turn around. And I think with the challenges that the Indian economy will have in terms of growth, the budget, by the way, there was really nothing for job creation. Okay, so that's the biggest challenge which is there. Having jobless growth is not the solution for India. So these things are to be kept in mind. These are long-term, multi-month, multi-year trends. We tend to forget them in the daily busyness of life and investing and trading. So just keep that in mind. So anyhow, the IT thing might be one of those which might be, which had all obviously for the last 1.5 years already been in a downtrend, and might be the first of other sectors which might turn around this year. Who knows? We'll see, right? Anyhow, the IT space definitely is a place not to go long on. It has to be only for shorting. There are some impressive green candles and all that, but at the very least, maybe a double bottom at 2400, 9300 on the Nifty IT index, and then we can, reconsider if there is some value there. The guidance from across all the IT companies has been, how do I say, at best meekly positive, but some of them have been pretty forthright in saying the H1B and all the other things will have to see only after they get into play. So a lot of, I think this level of uncertainty for an entire sector is happening again after almost a decade. That's really not good. And unfortunately, we are at the heights of that uncertainty, and it's not like that uncertainty is going to come down or settle down in the coming weeks. It will probably get much worse before there's some clarity. In an environment like that, it's only the brave who buy and stay put. There may be value, right? As a matter of fact, there is, but when the heart beats differently, the price is going to behave in line with that. So all the logic can go out of the window. This is all about sentiments in the IT space right now. All right, so IT, use the bounce to short. If you're shorting, it's definitely one of the sectors that you want to keep on your watch list if the market turns down, which is probably going to go down a lot more. So we start off this part one with two very different sectors. One is the IT, and the other one is, of course, the bank Nifty, right? So that's been two completely opposite behavior. So you've got one set of stocks where you can clearly be long, another set of stocks which you should clearly be short on. All right, so moving on to the other ones, let's look at Nifty Auto. So, wow, wasn't expecting to see red today. This is third, yes, right. So Nifty Auto close to its life high. not very far from that, but clearly some trouble on the price front. So maybe just a correction after the budget rally, maybe some profit taking. We'll have to wait and watch on the Nifty auto, but overall seems to be bullish. Then we look at the FMCG. All right, so question is, do we have a shooting star in place right now? We definitely have sort of spinning top doji today on the FMCG index. Do we have a shooting star yesterday? And have we come to a sort of double top? This is the entire picture from 2011. Have we come to some sort of a double top as far as the FMCG index is concerned? It's not really there at the double top, but on the other hand, not very far from that either. So that's a place to watch out for. If it does break that, however, 23,200 and big massive rally further up on the FMCG side, but if that is a double top in making, then quite possible that we go back to 21,000 or 20,600 on the FMCG index. All right. The metals. So that's you know, after giving a very unusual, rather, shouldn't say very unusual, it doesn't just that it's not very common. An expanding triangle. It has gone up and is now sort of consolidating at 3150 and doing quite a bit of sort of doji spinning top like patterns, though it had the bullish move on the budget day. So you don't have the entire picture. All right, okay, sorry. So we are here at almost 3150, whether it can break that and 3200 and then go up further to 3500. So this space has had a fantastic recovery in 2016 from 1600 to 3200, so almost 100% move. And many of the metal stocks, quite a few of them, the frontline ones, have done much better than that. And whether this continues, and I think the metals looks like they will. This trend is definitely very strong, or whether it is something that pauses. Given the infrastructure push, given the construction push, at least the business side seems, I think, optimistic enough. So there's really nothing of concern there. And China slowing down and some of their metal factories being closed by the government of China because of extreme oversupply is overall good, both in terms of some restrictions on imports of metals by the government of India on Chinese metal products and potentially more consumption of metals in India in the domestic economy should be fine for the Indian domestic metal players. Okay. Then looking at Nifty reality. So this was one thing that did really well in the budget, right? Shot up. What's interesting here is we've got a chart from 2011. So this has been basing out and looks like it's a weekly chart, by the way. So from having fallen from 520 in 2010, we unfortunately don't have more history than that. Oh, wait a minute. That's it. That's a very all right. Seems to be now in a very strong up move, right? So for almost 2-3 years, it's been sitting at that 150 sort of mark, and not sure. Yeah, so the demonetization and all that drama, and after that, you notice that this is perhaps the gap here that is being now closed. So the market has to still climb about 7-8 points, almost 3 to 5%, for this gap to be closed. So this was the big move on the budget for the realty stocks, and I think now they are set to move up higher. So quite a few budgetary incentives, consolidation in the industry. The problem with this is reality is a pretty mixed bag. There's some people who are doing pretty good. The others which are burdened with debt like nothing, and fundamentally in a really, really sticky spot. So it's not the easiest decision to make on the entire reality pack, but some of the frontline stocks should probably be doing well on the reality. For sure, one thing is about it's coming off its multi-year lows of 160, and if there's any benchmark to be had about where it was a few years back, this could be index or a sector that doubles or triples in the next 2-3 years. We just have to wait and watch. A lot of push for affordable housing and things like that. So house for all by 2022 or 2020, something that was a slogan by one of the slogan of the Modi government. And sure, with the 2019 elections being looked upon by the government or the BJP very keenly, they want to do what they can to make sure that the common man is positively benefited by the reality side. Okay, then looking at Nifty Pharma. So pharma has been hit big time again because of Trump, and those of us who've been watching the news, you might have noticed about how there's this meeting between the CEOs of the US pharma companies and Trump last week, or rather was it this week, and how some very clear words and very strong words were used, where Trump said that these astronomical pharma prices in the US have to come down. You use a word like astronomical. I was telling a friend just yesterday, day before, discussing all this, and then you tell the CEOs on their face at a breakfast meeting in the White House that we've got to bring prices down. Coming down by 2, 3, 5% is not a big deal when you've said they're astronomically high. Right? So we'll have to see how that pans out. Now, whether that is good for the Indian companies in terms of greater demand, generics, or they'll get made in, make in USA type thing is something to keep a close eye on. What is, however, interesting, looking at this as a weekly candle, is the pattern that is now developing. So we had a weekly hammer here about 6 weeks back, end of December. Then we are having a nice strong weekly hammer here, and it could be that the worst is over for the pharma companies. From almost 1.5-2 years, they have been going overall down, just like IT has been. But IT seems to have potential to go lower. Pharma might have, just, we can say might have put a bottom in place, and now maybe pharma is set to rally to about 11,000, and that's almost a 5% move on the pharma stocks. Today's right, so interesting that on the first and before that the pharma index had gone down. All the other indices that you saw, sector indices, did extremely well on budget day. This one went a little down and then sort of caught up with the rest of the market yesterday, and today it goes up and almost hasn't broken out, but it has effectively gone through that resistance zone between 10,500, 10,600. Looks like to me that next week pharma could break out of this and maybe go to 11,000 in a couple of weeks or even a month, it doesn't matter. So pharma is looking good in terms of a trading setup situation. Right? Nothing else seemed this good in terms of long positions. Pharma looks look for long, and IT looks good for shorting. None of the other, the only thing to short is the Nifty space, the IT space. Nifty. Okay, I want to look at the private and the PSU bank separately. We looked at Bank Nifty earlier. Since we have it, let's look at it. So this is the private bank index, and more or less a copycat of the Bank Nifty itself, doing very well. And then the PSU bank index, let's see how that is. Whoa, that's really done something today. The PSU banks, something happening in the PSU banks which is not happening in the private sector banks. So if you want to put your money on the banking side, looks like bigger opportunities on the public sector banks and not the private sector banks. And what's also interesting is that looks like the market is at an interesting sort of support resistance zone at around 3,500. And by the looks of the candles, looks like the market is in a pretty strong mood that the PSU bank should do well. Another 500 points on the PSU bank index in 2-3 months is very strong possibility, and we're talking about a 7 to 8% rally in the PSU bank stocks. That's definitely going to be impressive. Today's green candle on the PSU banks, I think that's the strongest green candle we've seen. The daily green candle today. A lot of the other indices, sector indices, had this consolidation, doji, swimming top type things, if not clear red candles. But this one is showing very strong relative strength. And looking at everything that we saw today, if you have to look for a trading opportunity in the coming week or two, the highest probability on the long side looks like PSU banks, and on the short side is the IT space. The pharma is also looking, I think, quite decent on the long side. All right. There is one more, Nifty Media. All right, so Nifty Media gapped up today. Most of it is just Z. I think 50% of this weightage is just Z. Oh, this is also on account of Sun. So the Maran brothers got acquitted, but then the prosecutor is going to appeal that and it will go to Supreme Court or whatever. But 23% up move on Sun TV stock today because the Maran brothers got acquitted. Yeah, and yeah, we'll wait and watch. What's not so nice is the long upper shadow in today's daily candle. Definitely some selling coming up at higher levels. So event based right now, but still having technically broken out, I think it's looking for an opportunity to perhaps go up further. All right. So 3,100 is a possibility in maybe 1 to 3 months on the Nifty Media stocks. All right. That's it. So if we have to quickly wrap up, it's the pharma looking good, PSU banks looking good for short-term long trades, and on the shorting side, if you have to, then it's only the Nifty IT as of now, and that stays in line with more or less the broad market, the Nifty itself, which is strongly bullish, and even the US markets, remember the Nasdaq chart, that was also quite bullish. And the rest of the world is not so great. The other thing, of course, will be events, the political events. I haven't really been watching the news. I'm not sure what the media and the commentators and the public and of course the market is going to feel about a mixed bag. I don't think anyone is saying that BJP is going to sweep all the 5 states and win. Um Heard from a friend who has a business in Goa that more or less BJP is going to lose that and combine in Punjab where you have SAD plus BJP together in a sense for 10 years and a strong anti-incumbency factor. That's what at least the media seems to say. So it looks like these two places is sort of a foregone conclusion, if I may stick my neck out. They lose. UP is the, I think, sort of litmus test. But for whatever reason, if BJP does win in Goa and Punjab and UP, and there is nothing like invalidation for what Modi and his team is doing. Demonetization to be damned. Nobody's talking about it. The real man seems to have said that's absolutely fine. So I think 11th March or 10th March is when the election results are being announced. Could be a much bigger trading event and opportunity than the budget day. So just think about it. Maybe we'll have at least an online interactive session on that day and look at trades. Okay, so for the coming week, this wraps it down. The part one of today's IMR. So basically, would be just to sort of put some levels on the Nifty. I would wait to see if 8750 can be broken. Looks like it would be, and if it does, then long till 8800 for sure, probably even 8850, 8875. But if 8640, sorry, or something like that breaks, then I think 8600 or 8550 is a distinct possibility. There was a sort of question or a poll in a sense just before the budget saying whatever it is, the budget is going to trigger the Nifty either to go to 9,000 or for it to go to 8,000. Looks like it's all triggered to and all set to go to 9,000 and who knows, maybe a nice high. All right. So no shorting at all, Nifty or Bank Nifty. I would say be a little cautious. Let it break 8750 and then it could zoom all the way to 89 or 8950 also. If it does come down the Nifty, then probably good support at around 8600, 8550 and could rally up again from there. So whether you use futures or you use options, really up to you, but no question of shorting it, right? Okay.
Musa, actually, I have straddle on this actually, 8,800.
8,800 long straddle.
Yeah.
So you're expecting
both are negative.
Yeah, they will be. When did you put them in place? When did you take
I put it on Monday.
Monday before
Monday, Tuesday it was on positive.
Wednesday
it cracked.
So you took the 8,800 straddle when the market was at 8,500.
No,
before the budget.
8,700 something was there. Yeah, before the budget, 8,700 was there.
Ah, okay. So you had gone.
8,720.
You had gone long on 8,800 call and put.
Yeah.
What was
put
the?
Premium was 212 for put and 75 for call.
Mm-hmm. And why did you choose? Yeah, right. Why did you choose 8,800? What was the logic behind that?
Actually, it was 8,700 odd was there. So I thought at the moment 8,800, but I was very curious to do a first trade actually.
Oh, okay.
In options, I started first 2 days, it was close to 3,000 gain was there.
Okay.
Till Wednesday afternoon. After that, it started cracking. Now it is close to 7,500 negative is there. So uh, still positions are open actually. Still it
Okay.
is first week of February, right? So
Uh-huh.
I'm carrying the position.
Okay.
So next move, what?
So I think, okay, I mean, a good opportunity that way to, for the next FNO class tomorrow or this weekend is basically looking at positions that have gone wrong, like this, in the sense that we're making a loss, and then what are the corrective steps to take for reducing the loss. We had that discussion last week also. We'll continue with that, because
Okay.
right now the biggest loss for you, which is some, in a sense, really can't recover from that, is because of IV, right? Um,
Yeah, it has come down.
yeah, I know.
Yeah, Wednesday afternoon, 1 o'clock, suddenly from 14, 16 to 16, close to 16 was there. It is now, it is around 12, 13.
Yes, right. And if you
Suddenly it
remember,
has come down. After
right,
1 o'clock,
yes, and if
after
you,
1 p.m., it has suddenly crashed, IV.
yes, if you remember when we were doing in the options class about
Yeah,
6, 7 weeks back, the Vega, and how just 1% change in IV makes a huge difference on the premium. You know, so
exactly, yeah.
I think this is a good time again for you to look at whether historical IV data is available to you, right? Because that is something that would really have helped to know whether the IV is expensive or not. Of course, as a thumb rule, one would say because there's a budget and there's so much expectation and this and that, the IVs would be expensive. But what we don't know is how much more expensive or how much more than the average. And when you, I think the most valuable lesson right now, Ramesh, in this discussion with respect to FNO and
Yeah, what I should have done is that once market started going up against my this thing,
mhm.
I should have come out. I should have come out. I think when I went entered into negative territory, I should have come out,
No, see that,
considering the IV.
yes, see that is there.
Was the event?
No, no, that is there. My question is a little different, right? Or rather, my thinking is different. Whether that trade itself should have been taken in the first place, given the IV was probably, high. Yeah, the reason I cannot give a clear black and white answer is because I don't know how much the IV was higher than average. If it was just high by 1 or 2, 3%, all right. But if it was high by about 5, 6%, then it was really, really, really expensive. And that's what I'm saying. Whether you have it on the Reuters terminal or on the MyFNO or whatever it is, if that date, see
My
now,
FN,
yeah.
my no HB is there. I am not sure whether that is correct or
Okay,
yeah.
so you'll have to check on that. But my point is, I think, one thing is the losses, of course, we'll discuss that in the FNO class tomorrow more in detail. But I think the real bigger picture and the bigger lesson in this is now I think it will hit us more as to how valuable historical IV data is, you know.
Yeah.
And I mean, theory is one thing, but when you are hit by a loss like this, then that whole lesson just becomes more grounded and goes home. So have a look before. I mean, tomorrow anyhow the class is in the evening. You've got time. If you
Yeah.
can find historical IV, not historical. We don't want historical volatility. We want historical IV. All right. If you can get that, then bring the data to class and then discuss that. I think it will be really useful.
Historical volatility is there. Historical IV is not there.
Just check again. I
FNO.
mean, just check because volatility is fine, but what we really need is IV. Okay.
Okay.
So because volatility is what happened, IV is what is expected to happen, and that's what gets priced in the option premium, right? So that's what
Then
we
that is
really
not
need.
FNO.
As far as the trade itself is concerned right now, um, I think it's Now that you've held it for so long and there's another weak opening, maybe you should just, I would say, my view at this point would be just leave it and see what happens till maybe Wednesday or Thursday or something. And if it breaks up, if it breaks out of 8750, then get out of the put. And on the other hand, if that 8750 resistance becomes stronger and stronger and there's evidence that's going to go down, then it'll be better to get out of the call, and make money on whichever direction is favorable. Right at this point, I don't know what that will be, because on the one hand, you've got the Indian markets going up, like you can see on the chart right now, in excellent and very strong volumes, but the global markets are going in a different direction now. And if we get into a strong wait and watch mode because of the local elections, it could then stay stuck at these levels, maybe give or take 50 or 100 points this side, that side, in which case the long straddle will start losing money. And then we'll discuss how we could recover some of that using some other alternative strategy in the FNO class.
Okay.
Yeah? Okay.
Yeah, just I wanted to get into options. I think okay.
No, good. I'm glad. So your hand is fully recovered.
Yeah. I was waiting for this. So
All right, good.
one day I did, but
Okay.
I should. It wasn't positive. This thing.
Great.
My presumption was that this long-term capital gains they might introduce, and
Yeah.
foreign portfolio investor tax issue will also come. Like that was the market prediction actually.
Yes.
So on that basis, I thought it may go for 300 points down.
Right.
So on that was my view actually. So.
Sure. No, what is good and what is important is that to have a view. All right. If it becomes wrong and it doesn't see, if now that you mentioned it, I think then by 12:30, 12:45, when it was very clear that none of these problems had become true, you should have gotten out of the put immediately.
Yeah. Yes.
So if you were watching the budget live, 12:40, 12:45.
I was watching.
So
I was watching, but this is first time, right?
Right.
I was continuously watching with budget actually on my laptop with earphone.
So here's
this is first time, right? So maybe better next time.
No, that's fine. So here's the thing, right? So this is the intraday chart on the budget day and 15-minute candles. So this was the last candle, which was at 12:45. I mean, this was from here onwards. I think he started at 11 or something, right?
Yes, he started there.
10:30, or rather, this maybe 10 here. This one or this candle.
Around 11 started.
Yeah. So this was, basically it. And once the budget got over, essentially is this spike. And actually, this is a 15-minute candle. If I make this a much smaller candle of even, let us say, 2 minutes, all right, then you'll see a lot more data. And right. So there was plenty of time to get out of the losing position. At about 12:45, 12:50 or whatever, 12:47, 12:48. And again, since you have IB and all, one could have easily put a exit order on both, and only one would have gotten executed. So in terms of management, definitely it could have been done much better, and you would have probably been sitting with a pretty decent profit had the put been closed. Anyhow, but good lesson. But like you said, you wanted to get your feet wet, so I'm glad you did that. So one of the other things we'll discuss hopefully tomorrow is both Nagesh and Rajendra did some fantastic trades on idea. Did he send you a message?
Rajesh, I heard him.
Rajendra, right.
Futures.
Oh, futures. Okay, Rajesh. I'm not aware of that. But Rajendra did idea and Nagesh did idea, and we'll see about what Rajesh did tomorrow. Looks like the FNO group made some good money with some good live trades this time. I'm very happy. So looking forward to discussing that. Yeah. Okay, so good. Any other questions?
Yeah, that's all from me.
That's it. Okay, so again, just to leave it with what you were saying or what you were discussing, this is the intraday chart, and look at how 87.55 is a sort of triple top intraday on Wednesday, right? And right now we seem to have gotten into sort of consolidation with a triangle type formation, and we'll just have to wait and watch what the market does. It has to sort of now break out of this, and you can see this. So, okay, sorry, we didn't have a full picture. This is a sort of double top almost. I thought that was the full picture. All right, there you have. So, sort of triangle, symmetrical triangle. It'll have to break out one way or the other, and if you just take the simple measuring implication of that, it is a clear 50 points, either breakout or breakdown. So really nothing to do. You just wait and watch and see, right? Okay. So as far as your trade is concerned, what you could do is maybe put a IB order which says that if the Nifty goes to over 8760, get out of your put. And I can put a conditional order and let the call be there. And on the other hand, if the Nifty breaks below 87.10 or 87.20 or something, then get out of the call and let the other leg ride, right? Since you already have it. Okay, cool, good discussion. All right, so that brings us to the end of part one of today's IMR. So I'll close this webinar here and send you a second link. And I think we'll focus on the PSU banks and the other private sector banks also, and the IT stocks and pharma. I think those are the setups to track for the coming week. Right. So we'll look at specific trades and strategies there. Right. So good. Thank you. I'm closing this and I'll send you a link in a minute. Good night.